There's this inverse relationship where if you're tweaking one and not the other, or you're tweaking one, it affects the other one. And so it's about finding that balance. And if you are doing tweaks, are you notifying the correct authorities of the other one? Because each one cares so much and is going to, impute penalties on top of that. So
before we get started with the show, here's a quick word from our sponsor, Global Training Center. As trade compliance professionals, you want to make sure that your procedures and documentation are completed as correctly as possible to avoid any delays and possible fines. We provide a range of trade compliance courses that will fit your needs. From in-person or web training to recorded on-demand courses, we can train one or even thousands on your team through your learning platform or on our portal. We can even customize a private session for your team. Go to globaltrainingcenter.com to find out more.
Hey, folks, we're in for a SimplyTrade podcast show, and we're ready for a good discussion today. We're going to have something that's going to be a little bit more advanced than your basic topic, but this is going to be something that everybody needs to learn. Hopefully, we're going to stimulate you with some thought on checking out on valuation. Lila, this is one of those topics that I guess I look at. It's like, okay, let's watch paint dry on the wall. It's like, it's not the most exciting. So how do you make valuation sexy to talk about?
Yeah. Well, then again, everything in our business, right? Anything in trade is like watching paint, right? So it's kind of like,
yeah, there you go.
Yeah. Until recently, I guess we have all these disruptions, like with the strikes and then the hurricanes and all the weather and all that good stuff. And all of a sudden, it's like everybody's talking about supply chain and shortages and how are we going to import and how are we going to get things into the U.S. and all of a sudden people are I shouldn't say all of a sudden. It's been I think it's been that way for the last maybe 7-8 years since Trump came into office. He's the one that put it all in the spotlight, don't you think? With the China tariffs and all that kind of good stuff.
Well, and again, we've talked about getting a seat at the C-suite table and or at least talking to the senior executives and doing strategic planning and discussions. And valuation is a key factor of that. That's one of those that, again, it's the devil's in the details. And when you start looking at this, you and I both are big proponents that when you're sourcing products, you've got to look at your cost holistically. And part of that is identifying the actual cost of the widget that you're buying or selling. And then you can start adding the ancillary services and other things with it. Anyway, with that, Lila, why don't you introduce our guest on this one?
Sure. So we had some people reach out to us. We normally do anyway on LinkedIn or by email or even at conferences. But this one, and it's usually because it's a friend of a friend or something. But this one I was really happy to hear from because Carl just reached out. I mean, he was not in my LinkedIn. He is now, but he heard our show. He liked the premise of it. And he said, "Hey, what if I go and explain or talk to your team, or not your team, your audience about what we do?" And I was like, "Yeah." And we got to talking, and so him and Jay. So we have on the show Carl, if I mess this up, I'm sorry, Badinsky, and then Jay Cho. Okay, cool. Okay, and Jay Cho, and they're both from Aprio. Again, I hope I didn't mess that one up. And but thank you guys for joining and for reaching out. And that's a lesson also for everyone else that's listening. If you feel like you want to share something with our audience, don't be afraid. Just reach out and do it, and let us know, because we'll be more than glad to entertain just about anything having to do with international trade, logistics, customs, etc. As long as it's not something wacky, way out there, but even that may even make it into the show. But anyway, thank you guys for coming on the show. Andy?
Yeah, well, I was just going to say, for anybody that has some ideas and they want to reach out to us, like I said, reach out. But Lalo doesn't bite very hard anyway.
Yeah, it's not too bad. And Andy's hat doesn't mean he always carries a sidearm, so don't worry.
Yeah, you're right. I've got it up over on the shelf over here. So anyway, Oh my gosh. Okay, so let's talk about how do we want to start this?
Let's have them introduce themselves. Yeah, let's have them introduce themselves, what they've done, and their company and all that, and then we'll go into the actual topic itself. So, Carl, Jay, go ahead.
Yeah. Thank you so much again for having us. I stumbled upon the show because I've been doing transfer pricing a really long time, and I always thought customs kind of applied, right? Customs, duties, tariffs. But until I met Jay, I didn't realize that we are inseparable. And so I needed to educate myself, to learn more. And Jay does a great job of that. But I had to listen to the show to kind of get more, in depth into the weeds in some of these concepts, right? And transfer pricing is a very unique area. I can't say I think it makes paint dry, but I do think that they're so embedded, and so many folks just don't realize that there's this kind of inverse relationship between the two, that Jay and I keep bumping into these concepts and helping clients do that. So I'm just strictly a transfer pricing director. That's all we do. But it cannot go one foot without the other. So Jay, why don't you introduce yourself?
Great, yeah. I'm a customs and tariff director. I speak your languages, and I met Carl through our after I joined Aprio, but I've been working on the customs valuation for a long time, and there's really interesting intersection between transfer pricing and customs valuation. In fact, Carl and I were just on a call with the company exactly on the same issue. The company is multinational company, moving products or consumables or anything, and all around the world. They're transacting with the inter companies, like related party transactions. The CEO or CFO, they're saying, "Oh, I mean, is there a tax issue? I mean, there's a transfer pricing issue," and then but the thing is, they don't really think about the two sides of a coin. Transfer pricing is used as a customs valuation when goods are imported into U.S. or any other jurisdictions. So there's a lot of disconnections between tax and in customs, and then really the valuation is the one that kind of connects it. So that's we've been all doing. Make sure transfer price is aligned with the customs valuation rules. U.S. Customs, it's two different agencies, IRS, Customs, CBP. So we always find a way to kind of align those two together.
So with you're bringing in an aspect, I guess, of it with the IRS. I mean, most of us are thinking about the customs valuation, and more specifically, as you're getting in to the transaction cost. But when you're talking about transfer pricing, are you talking transfer predominantly like a related parties type transfer? Or are you using that just in general, a transfer price from one party to another?
So it only applies for the related party transaction. So if you have a contract manufacturer somewhere or a distribution center that is importing the goods in, doesn't matter if it's U.S. or wherever, right? That's when this concept of transfer pricing applies. And the good thing about it is the rules for transfer pricing, the methodologies, are pretty much universal around the world. So there's some nuance, of course, but what most supply chain people or customs people or CFOs or whomever, they don't really understand or realize is that their import price coming into that to XYZ country is actually their transfer price. And so there's this inverse relationship, I call it, where if we send our goods in at a high price, we're lowering the profit margin of that country, paying less income tax. Great, right? But we're sending them at a high price, so we're paying higher customs and higher duties, right? So there's this inverse relationship where if you're tweaking one and not the other, or you're tweaking one, it affects the other one. And so it's about finding that balance. And if you are doing tweaks, are you notifying the correct authorities of the other one, because each one cares so much and is going to impute penalties on top of that. So that's really what we come to do, is making sure we're doing the correct procedures to compute and optimize, but also documenting that. So you don't fall into the wrong hands.
And that's also, I guess, the reverse is also true, because we see that a lot here on the border. Carl, before we went on the air, we talked about how you're in Dallas and I'm here in El Paso. So here on the border, with all the cross-border traffic, and we have the IMEX or Maquila or Twin Plant, call it what you want, manufacturers in Mexico. That actually is a big concern or issue as well, right? I mean, things that get not transferred, but items or raw materials that get shipped to Mexico under your parent company, even though it's a Mexican company, it's related to you. And the way they value it and bringing it back into the U.S., correct? I mean, is that also like something you've all worked on, or that has been like a flag in any of your clients or anything that you've done in the past?
Yeah. There's a lot. Yeah, we deal with companies having nearshoring, making facilities in Mexico. You know, U.S. company may provide certain raw materials and send it, or intermediate products, ship it to Mexico, and then produce the finished goods and then return it to the U.S. All that, it's really a related party transactions. Really, the definition of a relationship is actually under regulation. I think it's a 5%, either direct or indirect ownership. But anyway, and then also it's at the other side as well. You're bringing raw materials into Mexico, finished products, or do the final finishings there, and then ship it to the U.S. And then you're transacting with the parent company or sister company in the U.S. That's all related party transactions.
Well, and to your point, as you're going through that, and like you said, you related parties and all that, to make an assessment, just like what I had opened up with, was that you've got to look at your cost holistically on moving some goods and whatnot. Part of that holistic approach sounds like to me there are times that you need to take and review a scenario here of getting people to the table to talk through what is the implication and the liability. More specifically, you're going to need to get your tax accounting side of the house involved, which is not normally, that is an area that's not normally involved when you're talking about usually planning out as far as the movement of goods and all of that. So your tax accountant, along with your import-export compliance, then you start talking about your logistics, your transportation, your IT, and all that. But to the point being, is it least or less expensive to bring in the goods maybe at a higher value, and you shorten your margin, obviously, for your profit, and so your tax is lower as a corporate tax? Or is it better to bring it in at a lower price and then just pay the tax? So, and you have things you can justify different ways there. But have I got that right as far as the parties involved? Or is there anybody I've left out here?
Oh, you did a great summary. Yes.
Yeah, that's right. It's the table becomes so crowded these days. You were talking about getting everyone at the right table. It's becoming so ridiculously complex and crowded. You have supply chain people, customs people, CFOs, transfer pricing or tax people, and they're all trying to optimize, right? Everyone wants to optimize, and they're trying to, fall off the radar of any of these various authorities, because it's not just when you're dealing with cross border, it's always multiples of two. So it's you have to satisfy one side and not the other, and it's all very, very technical, very, very product specific, industry specific. Even if if you have products that are duty free, a lot of people think that it's all smooth sailing. We don't have to worry about it, right? Because you just manipulate the transfer price and just deal with the tax. Well, customs still has plenty of reporting requirements, as you know, for duty free goods.
Well, then you also have, back to the IRS situation, there are taxes like a warehouse tax that that IRS assesses and different things. So part of your supply chain in this is in your design. Do you want the goods to come in bulk? You put them into a warehouse, you do the break bulk and you go from there? Or is it better to have them come out from the factory or distribution center offshore. And then when it comes in, it's going directly to your end client, and you're dealing with things that way. So there's a lot of things that need to come into play. I would say that one of the things that, as I guess a suggestion, I mean, the role I'm playing today is I'm in basically it's like the equivalent of the chief financial officer. I'm a finance director for the city here in Searcy, Arkansas. And all the different issues that we're dealing with, one of the things I will say, you could have a lot of people involved as you're talking through. In this case, in your scenario there's so many people that need to be at the table, but they don't need to be there all at the same time. So once you go through and look at some things, compartmentalize the different aspects of what you're striving to do. Once you've decided to say, okay, we know that we want to manufacture and sell this widget in the U.S., where we're going to manufacture that at, will it be domestically or offshore? That's when you get your purchasing folks in, along with your logistics, compliance, and all that. And to talk through it. Once that's decided, then the issue comes in as far as, and some of it could be done simultaneous. You're looking at the valuation and bringing in the right people. What would we do? And here's the scenario. So that's the key. A lot of people come to the table and it's like a blank sheet of paper. And half your meeting spent in discovery. What are we here to talk about? Versus, okay, here's some scenarios now. Let's focus our attention. What's the implications of scenario 1, 2, and 3? Would that be a good approach in what you're trying to look at here as far as helping people identify their transfer pricing, optimal process here?
Yeah, correct. So there's a pretty large fact gathering stage with any of our kind of engagements, right, to understand what's going on. And we do try to be practical and boil things down to the most simple, characterizations of these companies and the solutions, that they're providing. And it, again, is super facts and circumstances specific. There's a lot of customers, they just want the goods shipped to their facility, drop shipped that way. Sometimes there's some kind of sub-assembly that has to go on before it reaches the customer. We have clients that, they're middleman number 2 before it ends with, the customer. There's just so many different layers in knowing, what applies. I think that maybe the easiest way to describe something like this is Jay, if you agree, just through an example, right? You'll know exactly what example I'm talking about is, we had a client come to us. They were an importer from Europe, but they had a bunch of different segments, right? They were in kind of the machinery business. There was a component that was shipped in and sold. There was a lot of after sales that occurred. There was warranties. There was spare parts, and then there was still a manufacturing plant in Georgia that did some of the manufacturing of these different molds and pieces, right? And so they had to license a piece of IP from Europe to do that. And what they were seeing is, they had a really hard time monitoring the margin of all these different lines. They also had they were continuously making adjustments in the profit margins of the businesses or of the business units. But none of the customs compliance had been done for, I don't know, Jay, how many years, right? Like, you've been helping them trying to get everything fixed and get this straightened out.
Right. Yeah. And then problem is actually it's some companies really reviewing their pricing every quarter or every month, but some companies just do it on an annual basis. At the end, they're saying, "Oh, we are off the margin. Let's say U.S. making too much money on imported goods, sales of imported goods, and then they make an adjustments at the year end, and then usually that's when the compliance issue comes up. Are you making any lump sum adjustments to your cost of goods sold or pricing of the past imports? Now do you have to really report it and tender more duties to customs or not? So that's actually a common issue that we see from all these. But for this type for client that Carl briefly mentioned, let's say they're making an adjustments for their spare parts imports from, let's say, France. And then, they make like, I don't know, let's say $1 million adjustment a year. How did that really affect the customs compliance and then all the past imports that are affected by that adjustments, right? We ended up filing a letter with customs and then tender more duties, but there's a specific rules that are surrounding these transfer pricing adjustments, and customs knows these companies makes all these decisions and transactions under IRS rules and transfer pricing, and then customs has own rules under all the rulings and the regulations.
So Jay and Carl, let me ask this: is that at the end? I mean, we're talking through. Say, all right, we've gotten people's attention. Okay, I need to get a few extra parties to the table, if you will, or departments, and talk through some things. You go through all of this. What's been the results? I mean, bottom line is like, if I'm going to go through all this exercise, I've got to now reach out and establish a relationship. If I'm in the compliance area, or if I'm a CFO and I'm like, are we maximizing the efficiency or tax avoidance and duty avoidance and all? And that's legal to do, is to try and pay the minimum that you can. And I go through all this effort. It's going to take energy to do this. What's been some of the results that you've seen here for some of your clients? Is it worth all the time, or I'm going to go through all this just to save a penny?
Yeah, well, I mean, for customs perspective, and then Carl, you can go through a transfer pricing aspect of it, but the result is either really two. At the high level, is transfer pricing that you use is compliant with the customs valuation rules, and then there's maybe disconnections or maybe it's aligned, but really the first benefit is being compliant, obviously. And secondly, there are usually, if the transfer price is accepted under customs rules, is there a way we can kind of basically legally adjust the prices and then review the SKU level price and then see if there's any really a duty saving that we can optimize, right? Let's say companies making importing hundreds of SKUs, parts numbers, but the transfer pricing is actually look at your overall profit margin. So there's actually a lot of disconnections between the SKU level margin that you get on the invoice level versus the overall profit of a business. So that's where we see discrepancies. Make sure it's aligned with the transfer pricing at the bottom level of a margin for all the imports. So in that case, we usually may be able to find some duty saving opportunities. So that's basically the second one. And then third is probably the transfer pricing adjustments that I briefly mentioned. Companies making real end adjustments. There may be lowering the customs value, and sometimes because they're making a too low margin in the U.S., they wanted to bump up the margin by reducing the cost of goods sold. So in some cases, companies can actually get a refund by adjusting the value to lower value.
Well, before you go any further, and Carl, forgive me for jumping in here, but I want you to make comment on this. But I want our listeners to take note of this. Is Jay, with what you're talking about, for the compliance people especially, you're going to need a set of entries, if you will, and information to take a look at of what you're importing internationally. I mean, you could be looking at transfer pricing on a domestic basis. That's a whole different deal. It's all within the domestic realm. Which entity is going to be paying, taxes, if you will, from a domestic standpoint, and more of the state laws come into play. But on an international transaction, what I want you to take note of is you're going to need to take a look at all of your imports, your entries, and isolate them to the related parties. So it's like you're not looking at every single thing out there. You're needing to then isolate those things from specific shippers and or exporters. And hopefully the broker has marked it as related parties. But if they haven't, that's an audit item that you need to be checking in that. But that would be a key factor of, take a month, take a quarter, take a whole year, whatever, however many you can get, and keep up with it. But that gives you a working set of documents and information to work from. Then, Carl, then you go from there. It's like, okay, you've looked at duty assessments. Are there any programs we can take advantage of and all that? At the same time now, what do we do on the other side of the fence here?
Yeah, so I'm glad you clarified that. That is exactly the step we like to take, is like, hey, what are we working with, right? And to answer kind of the first question in terms of, let me highlight the two extremes maybe, okay? So on the positive side, the best scenarios that I have seen are those where the company, they engage us and they get their supply chain and customs and tax house in order. And this one particular company, they were in like the aerospace kind of government contracting sector. They were actually inbound to the US, so the parent was outside the US. Their goods were supposed to be duty free, and they had been paying them because they were always so unorganized. They needed their stuff today. They didn't care what it cost to get in there, but the sheer margin that they were losing on that every single time was huge. So trying to recoup that, while in addition to reducing the margin of the per unit price, save them in both duties and income tax, right? So together, I would love to see the ROI on that number. In fact, I think we're still computing it because it's not quite finished yet. But I mean, I really should have actually charged more for what they're going to be saving every single year, right? Now, on the flip side, the other extreme, which frankly, happens probably more often, unfortunately, that we want to help people avoid is are both, again, they're both screwed up, but we don't catch it first, someone else does, right? So it usually comes up in some kind of federal audit. Usually the states don't get that granular, but a federal like IRS audit, the two agencies don't really talk to each other. There are some code sections that say they're supposed to reference one another, but what ends up happening is they basically get caught. They don't think they're and it's usually not deliberate, never deliberate actually. But their intercompany pricing was not what we call arm's length or what third parties would do. That's actually the transfer price, is the intercompany price. And what happened is the IRS adjusted it. They ended up having to either disallow losses, tax losses, which is a huge hit, paying the additional tax, paying the additional penalties. It's double taxed essentially because they already paid the tax on that in another country. So you basically got hit twice with no, recourse, in addition to the fact that the customs then were not correct. And there's also exposure there that you really need to fix, because the customs penalties, as you know, are even greater than IRS penalties in most cases, right? So that's unfortunately the other side of the equation. And it's all about, just like you said, communication, making sure everyone's on the same page, and then documenting things. Because, when there is turnover or something in those C-suite level departments, or tax departments or whatever, and you can't support what you've done historically, you're typically in a lot of trouble.
Well, with that, let me just ask, is that for next steps, if somebody is interested in pulling some things together, and again, folks, we're going to have Jay and Carl's contact information with our show notes, but before they come to you to make your first meeting or first discussion more productive, what is it that I would need to pull together to have ready or be up to speed, if you will, proficient on the latest information on? What would you ask me to do?
For customs, I need an ACE data. That's all I need at least, or intercompany pricing policies. Usually that's embedded in the distribution agreements or other commercial documents. But anything related to how you price your imported products It's the most important thing. And then ACE data. I want to look at how much your volume of imports, and the duty spending as well. And yeah, Carl.
Yep, I think on the transfer pricing side, financial statements, and if you have a policy or intercompany agreements, we'd like to review those and take a look to see if they.
Hang on, you said financial statements of what? Of the company or of checking accounts or what?
Sorry, financial statements of the legal entity. So, for example, most likely in this case, U.S. company, right? The importer of record company. See what they're shaking out, because just a really good rule of thumb for the listeners is, if you're an importer and you're just reselling the goods, they come in and you resell them to the customers, and you have been making operating losses for prolonged period of time, and you're not able to explain that away, that's going to be the biggest red flag. That's going to be the biggest red flag that IRS has campaigned for many years now, probably 10 years. They have these inbound distributor campaigns. So those type of things are very good indicators that your intercompany pricing, your transfer pricing are not in compliance.
And just to add one thing, actually, for customs valuation, the third, this is actually important. We actually wanted to see financials of the seller, because customs focus on the sellers, how much seller is making from this sales of imports or sales of goods to related parties.
Well, and to your point, let's back up a minute. One of the other things that we need to be looking at, your tax accounting department, especially if it's related parties, obviously, and that's what we're talking about here, needs to also be involved with their counterparts that has the tax accounting for the shipper or the seller. So that needs to come into play too. It's like, okay, well, we have now made the U.S. entity better, and here's the price, and this is what we're going to pay from the IRS perspective for U.S. taxes and the customs. But then we may have just hung out to dry the exporter, and it's like, so it's got to be you're looking for a win-win, because at the ultimate, this rolls up to one corporation in this scenario we're talking about. So that's another thing is, so if you're looking for people to get involved, your accounting division. Especially with a global company, you need to have those multiple entities.
Yep. And that's why we get involved with the people from both entities usually. So make sure that we are aligned together.
Well, and the thing too is that having somebody like yourself that is an expert in this particular area, you will help a company navigate through the issues. They can help navigate to the right parties, and together you're going to get through this quickly versus somebody just trying to do it all on their own and they're still not 100% sure. So, having the confidence of here's the knowledge that y'all are bringing to the table and here's the steps they need to take. It's always good if you're going into a forest or somewhere to have a guide with you, you're going to get through it quicker. So same thing here is that the forest of transfer pricing, should we say.
I love that.
Yeah.
Mm. Well, guys, listen, I appreciate your conversation here today. This has been a relatively short conversation, but it's one that has a lot of positive implications here. One, just to know what you've got and how it's valued and how you calculate that, but then going into how you're selling it and transferring it from one entity to the other. And then finally looking at it to maximize the efficiency on, lowering your tax rate, lowering your duty rate as much as possible, and doing it compliantly. So thank you so much, guys.
Thank you so much.
Yeah, thank you guys. Keep it up. We love listening.
Oh, I appreciate that. Folks, listen, we really appreciate your listenership. Hit that subscribe button. Please share us. And I'm telling you, when we say that, it's just not words, folks. You really help us out with our show. And so we greatly appreciate you doing that. Lila and I are going to get to do some public appearances, so be watching for that. And we'll be sending out some things. ICPA's one, and we'll be up in Detroit for AIAG for those folks. And even up in Canada, we're going to be doing some stuff. So exciting times ahead.
Well, thank you all. And if there is any questions or any more ideas of anybody wanting to listen more about this, let us know, and we'll bring Carl and Jay back up, and or maybe through Global Training Center we'll do a webinar or something just to throw it out there to the audience. But just let us know on the comments, and we'll create more content like this. Well, thank you very much, and as Andy said, thank you for listening, and well, have a good day.
Thank you very much for joining us. SimplyTrade is brought to you by the generous contributions of Global Training Center. You can follow the show and GTC on LinkedIn or Twitter and other social networks. Make sure you check out the show notes in the description for a full rundown of today's show with all the important links. Also, make sure that you share this with a friend and subscribe on your favorite streaming platform. We really like hearing from you. If you enjoyed the show, make sure to rate and review wherever you listen to this podcast. If you or someone you know would like to be a guest in the show, or would like to sponsor SimplyTrade, or suggest any topic you would like for us to discuss, please contact us via email at simplytrade@globaltrainingcenter.com, or you can DM us on Twitter at SimplyTradePod. Thank you again for the privilege of your time. Happy trading. SimplyTrade is not a law firm or an advisor. The topics and discussions conducted by SimplyTrade hosts and guests should not be considered and is not intended to substitute legal advice. You should seek appropriate counsel for your own situations. These conversations and information are directed towards listeners in the United States for informational, educational, and entertainment purposes only, and should not be substituted for legal advice. No listener or viewer of this podcast should act or refrain from acting on the basis of information on this podcast without first seeking legal advice from counsel. Information on this podcast may not be up to date depending on the time of publishing and the time of viewership. The content of this posting is provided as is. No representations are made that the content is error-free. The views expressed in or through this podcast are those of the individual speakers, not those of their respective employers or Global Training Center as a whole. All liability with respect to actions taken or not taken based on the contents of this podcast are hereby expressly disclaimed.